Welcome back to Real Estate Mindset. Today's video is going to be absolutely with my boy, Orlando Minor. Orlando, sir, thank you for joining us today. Now, as you guys know from the title, I had Orlando come on my channel. He's a sincere friend to me. Orlando has helped me, with my content creation. He's helped me as a man, as an investor, and he's a very intelligent man that is in commercial financing. He's also a commercial investor. He's very successful, and he still has a heart. Right. And I tell them, my viewers, that all the time, Orlando. The problem with a lot of these investors, man, is the narcissism, is the ego. So, when I find someone like you that's still a human being, that still has love in their heart, man, and it's successful, I want to be your best friend. But you guys do me a favor. Before we really get started here, go to Orlando's page. As you guys can see right here, Orlando Minor, he is basically sounding the alarm like I am. He has a lot of experience in commercial real estate. He has a lot of experience in investing as well. So go to this man. He's one of the good guys. I've talked to him myself. But today, my friend, we are going to talk about, what's going on in the commercial market. Now, and I'm almost done here, and I'm going to give you the mic, Orlando. I'm long-winded sometimes, but I've been warning my viewers of a potential, catalyst and black swan events that will continue to decline prices, home values and prices. Now, I want to note though, real quick, we're under historical crashing right now. So the fastest price crash that we've ever experienced, and that's without unemployment, foreclosure, and hypersupply. So we don't even have those things yet. We're already down based on numerous data sets, and some of the some of the black swans that are catalysts that I see in the future is one, obviously, in my opinion, one of the biggest ones, new construction. I found a lot of builders that were overexposed, depending on the market area: Phoenix, Las Vegas, Austin, even in some places in Houston. So it's new construction. Second thing is all of the investor share, the rookie investors that are basically stuck, in the market because they wanted to flip or something along those lines. So really weak investor share. Another thing, Orlando, is the short-term rentals like Airbnb. Obviously, it's getting crushed globally. I think there's going to be some blowback from short-term rentals, but also long-term rentals. I see a lot of inventory because I'm in Houston. We have data now where Houston's rental market is declining. I have a rental myself, lost a tenant. So long-term rental market could be a black swan event. Consumer credit cards 3 times higher than '08. Auto loan defaults are higher than pre-COVID. So, there's a lot of things, but really what I want to point out though, Orlando, is the commercial side of things, commercial backed securities, commercial financing, commercial real estate, because from what I'm saying, it is taking an absolute massive hit, just like new construction. And I don't think a lot of people realize that. And I want to start, if I may, Orlando, let me pull up an article just to show the viewers kind of where all of this came from. Now, this came out yesterday. Blackstone, which is one of the biggest, if not the biggest, holders of real estate rentals, right? And obviously they have a shell company, it's a different name, but Blackstone defaults on a 562 million Nordic property-backed CMBS. Okay, so they default on a huge, obviously they have billions, right? I get they have billions, but to me, the red flag is if these people have billions of dollars, why are they defaulting, right? How did that happen? So can you tell us a little bit, Orlando, about what happened?
Yeah. First of all, I want to say thank you for allowing me on your platform and that great intro that you gave me. I really appreciate that. But yeah, when it comes to this Blackstone scenario, what's really happening here is the fact is that they're trying to they let the loan go into default on basically kind of on purpose. Now, I did some digging on this properties, and it's a portfolio of about 45 properties, right? And in this portfolio, it's mainly office buildings. And in this portfolio, 45% of the office space, or the space of all of the units, is vacant. So that's almost 50% vacancy. Now, that's really the real question, but the reason why they went into default is they're trying to restructure They want to fight with the lender and tell the lender, hey, yeah, we know we owe you this amount of money, but can we restructure this so we can pay you lower? Because the value of the property is lower now. And so that's what this whole back and forth game is, because no one is going to fight the fact that we all know Blackstone has enough money to make this right. They do. But the real question is why is there almost 50% vacancy in that unit? Why is there not enough people to fill these spaces?
Right. And you know, so in other words, they're looking for a loan modification. Like it's a commercial.
That's exactly.
And they're big enough to know that, well, if you don't give it to us, then you're in trouble. We're not. So it's kind of like, it seems like a little bit of a dirty game. They're trying to get a loan modification. Talk about the vacancy rate on the commercial side, Orlando.
Yeah, so the vacancy rate on the on this portfolio is 45%, and it's office buildings, and we all know what happened with office, and it's still happening. We have a lot of remote workers, even though a lot of that is being called back. What that did was set a different mindset for a lot of companies to think to themselves, maybe we don't need as many people. Maybe we can hire abroad, and so we don't need to have 500 locations. Maybe we can downsize that to 100 locations, have 1 or 2 headquarters, and be good, right? And so you're starting to see a lot of retraction when it comes to this office space. And this is the domino effect of what happens when a lot of these companies decide we don't need all of this office space. And that's why this vacancy is so heavy. And it's going to this isn't just a Blackstone issue. This is a big commercial issue where you have seen areas like San Francisco, Houston, where they have so much office space in their downtown area that's vacant that they have to figure out a way to reuse that, turn it into multifamily, turn it into something else. But they have to figure out a way because the wave of vacancies is just getting higher and higher and higher, and it's going to crash eventually.
Now, do you think that's a result of obviously unaffordability? And also, do you think that's a result of too much inventory? Do you think there's too much inventory in the commercial property sector?
Oh, yes.
Yeah.
There's way too much inventory. I mean, if you just go and you take a look at just apartments, right? And that's still commercial. And that's something that people actually need. The vacancy rate is just going higher and higher for multifamily, for rentals, for people living there. It's the vacancy is just going higher and higher and higher. And that's because these companies are continuing to build and build, and it's overbuilt. It's overbuilt to now what's going to happen when you have all of these vacancies? They can't make their debt payments, just like the scenario with Blackstone, because let's take a look at it. If you have 45, almost 50% vacancy, you can't make the mortgage payment, and your expenses are eating up all the amount of money that you could make the mortgage payments with. So do you think do you think Blackstone is going to say, you know what, let me reach into my pocket and go ahead and pay this mortgage? They're not.
They should, because that's what we have to do.
Exactly.
So Orlando, tell me, in your opinion, do you see this trend likely to continue, especially from like the Blackstones, the BlackRocks, the bigger companies? What do you see happening in the future, assuming that the Federal Reserve is going to do exactly what they say they're going to do, like they have been saying this whole time? So why fight them? I don't get it, but whatever. But, assuming that they're going to continue quantitative tightening, the 10 year is going to stay high. Do you think that this is a sign of things to come? And if so, what do you see happening in the future?
Okay, so yes, I do. I think it's you can never really guarantee anything, but you can really kind of see the dominoes starting to go in that direction. And the reason is because, as you just said, the tightening, and then the Fed continue to raise rates. Now, those rates do affect, they're the same as residential. So if residential goes up to 8%, then you can almost guarantee that the commercial side goes up 1 to 2 above that. So you're looking at an 8% now, that's 10% for commercial and investment properties. So what's going to happen when a lot of these guys come out of, a 3 or 2% interest rate that they had 5-6 years ago, and all of these notes come due this year, and they have to refinance it? Now, when I do the underwriting on that,
Yeah.
can you afford a 10% interest rate on a value that has decreased? You can't. You can't. So what happens in that scenario? Well, the only things that most of the time what these companies do is they give back the properties to the mortgage holders, right? Because a lot of these loans are non-recourse loans. Non-recourse meaning there's not someone personally held liable
Right.
for the loan. So they'll give back the property and say it's not worth it paying it off because the value has dropped, interest rates are too high. And what does that do? That means a ton of foreclosures. That also means a ton of properties and inventory left on the market. That's not to include the new construction that is already available.
Yeah, good points, man. Let me bring up an article real quick. Let me kind of just put this up here, and I want to get your opinion on this, Orlando. Take a look at this. And this was released March 1st, and we already knew this,
Right.
but Blackstone blocked investor withdrawals from their $71 billion real estate and investment trust in February. So to me, if I'm investing in this company, obviously I would be extremely worried because they've just eliminated my ability to get my money back. So to me, it's red flags. Can you go into a little bit of why they may have suspended a lot of the withdrawals from their real estate investment trust?
Well, it's just like like a bank would do, or what you see the stock market do, right? The stock market has this red button that they push that if too much selling is happening on a particular stock, they just won't let it free fall, right? And the same thing is happening with Blackstone. Blackstone is saying, wow, we need to slow this down because we don't want the run to continue. We need some space. Maybe let some people change their mind if they can't do it. Maybe you will forget about it as an investor if I tell you, hold up 1 second, it's going to take you we won't be able to give you your money back or start your application until 2 weeks later. Maybe you will think about it and go, you know what? I'm going to keep my money here. They want to stop the bleeding.
Yeah.
And with that being said, if they don't stop the bleeding and the fund becomes insolvent, that's like the worst case scenario. Because then for sure, Blackstone would have to go into their pocket and pay back individuals. They don't want that. And a lot of their money is tied up in debt. It's just not $71 billion fund just there.
Yeah,
It's $71 billion locked in with debt.
Yeah, it's not even all liquid. I mean, they have,
Of course.
they have massive loans. I mean, I see this as a black swan event, man. I mean, there's just so many black swan events. We already have historical price decline without the normal three things from last time: unemployment, foreclosure, and hypersupply. And we're at historical paces. None of the black swans have even dropped yet, per se. This is crazy.
Right.
So tell us, Orlando, what impact do you think that the commercial sector kind of melting down, obviously interest rates 10%, commercial property going down, demand going down, vacancies going up. What impact will that have on the residential real estate market?
Yeah, it has a lot to do with it because people may not want to believe it or not, but commercial is extremely linked to residential. And the reason is because a lot of things that people do in their everyday life, outside of just living in their home, they do in a commercial building. You go to the grocery store in a commercial building. You go shopping at a commercial building. Your small business is in a retail commercial building. So if all of these properties, go into foreclosure, and things of that nature, all of that situation is going to fall. You have to remember, if all of those situations happen and let's just say 10, 12, 13, office buildings in your city closed down. Where are all of those business? Where are all those families going to move their business to? What's going to happen with that? I know a lot of people think just because a office building goes into foreclosure doesn't mean that your business has to move out. Contrary to belief, that's exactly what happens. Your small business is going to have to find somewhere else because that new owner may not want you in there. That new owner may change up the whole practice. He may increase the rents on you. There's a lot of things that can happen that will bleed over into the commercial realm. Not only that, let's talk about What happens to the banks that are holding all of those
Oh,
foreclosures? What are they going to do? Do you think they're going to increase fees on banking structures and stuff to make up all that money? What new rules are they going to put out to affect the regular everyday person? So it's just not a scenario where it just stays in this commercial realm and we don't have to worry about it, and just let the rich people deal with that, and that'll be that. It will affect everyone.
and what about this? Can you see? Okay, so talking about commercial residential, so like apartments, more than
Yeah.
4 units, whatever. Can you see, as a result of the hard times, the interest rates, and the defaults? Can you see some of these commercial lenders, or even lenders that foreclose the property? Can you see them lowering rent in order to have some type of a cash flow? And do you think that there's will be enough of those scenarios of lowered rent in commercial real estate to actually impact the rental market and impact shelter and CPI and things of that nature?
No, no. First of all, banks are greedy, and banks aren't going to lower the rents. They're going to try to maximize the rents. They rather take a holding cost than lower the rents.
Wow,
That's
that's
just what it is,
crazy.
right? They would take that. But here's the deal. It's not the banks that are going to lower the rents. It's going to be what's lowering rents right now. It's inventory. It's too
Yeah,
much
yeah,
on the
yeah,
market to if you're adding 50,000 units, every single month
yeah,
to your market, you have to understand that's going to water down. And if there's so much supply and only so much demand or little demand, then of course prices
yeah,
are going to have to drop down. Because we all know what happens. If you build a building today, everybody's going to want to move into that new building. But what if I have a 20-year-old building as a landlord? What I'm going to have to lower my rents lower than what they are
yeah,
offering.
yeah,
So it trickles down, and
yeah.
that's what's going to lower rents. And it's
Right.
currently happening right now. We're seeing it.
Yeah,
We're seeing
yeah.
it happen all over.
Yeah, I mean, it is amazing. So Orlando, and I know this is a hard question, but when do you
Yeah.
think that when do you think that specifically the commercial sector, whether financing or actually property ownership, commercial or residential commercial, when do you think it gets to a boiling point? In your opinion, when do you think that the cat comes out of the bag per se? Now, not me and you. Yes, the cat's out of the bag.
Yeah. Yeah.
We see what's going
Right.
on, but like mainstream media, the proof is indisputable, which I'll say it's indisputable now. But you know what I'm
Right.
saying? When does it hit mainstream media? When do they point out that problem, in your opinion, and why?
I think that the main point is when when all of the loans mature, or the bigger portions of the loans mature, and they're in this new environment. That's going to
Yeah,
happen probably sometime this year.
yeah,
And we're going to see how these companies deal with it. Are they going to take the money out of their pocket and
mm,
infuse cash
mm-hmm, mm-hmm,
into whatever loss that they currently have, like me and you would have to do? Or are they
yeah.
going to automatically put the properties in foreclosure and ask the banks to take the hit?
Wow,
Right?
wow,
Which one are those? And if I had to bet, if I was
yeah,
betting on this,
yeah,
I
yeah,
would say the companies are going to push back and tell the banks, you need to take a hit on this. You need to, because we
oh,
need to work this
yeah,
out. And you could see how
wow,
that's going to happen. And that's going to happen all this year. There are a huge amount of these commercial backed securities that are coming due
yeah,
that, borrowed money in the heyday. But now imagine going from 2-3% and 6-5 years ago to now coming up to 10%. It's
yeah.
it's not going to work with a loss of income.
Right,
It's not
right.
going to work.
Yeah, it's going to be really interesting, to see all of that go down, man. So, Orlando, that's pretty much it, man. I wanted to keep the video, just basically brief to the
Yeah.
point, because I don't know as much as you, obviously, well, about a lot of things. I know
No,
more than
no,
you
no.
about shark fishing, land-based shark fishing.
You
That's
definitely
probably it.
do.
But I mean, really astonishing, man. I mean, I've always looked at commercial as kind of like the current day subprime, where it's kind of like the
Right.
wild wild west with regulations minus the 20% down payment. So there's value in the collateral, so that makes it different. But
Right.
the lending restrictions, man. I mean, they're lending to anyone with the 20% down payment. It seems like on almost any property. Now, I know that's not true. There's environmental, surveys and whatnot. But also what you just woke me up to is the foreclosure process for commercial can be much faster than residential, where
Right.
people hold on to
Right.
their property, loan mod, they're running out the clock. But in commercial, it sounds like it could fall apart relatively quickly. Is that
Yeah.
correct?
That is correct. And the reason why is because on a residential loan, you are personally on the hook for that. Like
Yeah,
there's
yeah,
personal guarantees. A
yeah.
lot of these commercial backed securities, there are no personal guarantee. It's non-recourse. I can promise you every loan that Blackstone has done, there's no one
Wow,
personal guarantee in that, right?
unbelievable.
So you can just if for whatever reason defaults, you don't want it anymore, you can literally hand that back to the bank and walk away. And that's
That's
it. That's
crazy.
all you
That's
have to do.
unbelievable. I mean, it is a subprime of today. That's
Yeah.
a subprime of today, man. I mean,
Yeah.
this is crazy, man. This is crazy. I mean, it's just blowing my mind. There's just so many things that we don't even consider. And, and a lot of people are like, no, it's not like 2008. You're cool. Go buy. And I'm like, yes, it's not like 2008. So you need to understand more what's going on now, because it's not
That's right.
2008. 2008 was easy. It was a
Yeah.
subprime collapse. It was a foreclosure. Foreclosure blew up. It was easy to understand
Yeah, this is a
what
little
was
bit different.
well, it wasn't easy for me because I lost everything, but like comparatively, like there's just like so many the narratives are the same as 0708, he said, she said, but like the data that we have right now, Orlando, I mean, it's just screaming out to people like stop, hold up, and then we have the Federal Reserve. Unlike before, the Federal Reserve was like, nah, we're good, go buy. Now the Federal Reserve is like, hold up, we need a reset. It's still people are fighting the Federal Reserve. So, anyways, I just think we got to keep looking at various black swan events, various data points, because I think the reality is this could be a much worse financial collapse as '08. It could be a much deeper systematic failure. It can hit the
Right.
global markets. It really depends on numerous things. But we're looking at price. I'm looking at prices for houses. We're already declining. I just see all of this as adding to that. Now, Orlando, before we go, can you explain how any of my viewers that are first-time home buyers potentially
Mm.
can use this information to, become a stronger purchaser, maybe just settle down their nerves? Can you tell them what they should do with this information?
Yeah, I would say info like this, it just only allows you to understand exactly what's going on in the housing market. And not only that, a lot of my viewers, your viewers, they're trying to figure out what's the best thing to do. And this rent, should I buy or should I rent this scenario really helps you out, because if you know that rents are going down, you know that there's a bunch of overbuilt units in your city or wherever wherever you live, right? Then you can go in with ammunition to these property owners, and when you go and say, look, yeah, can you give me 2-3 months free rent or whatever, or cut rent down by X amount or whatever. Remember, you're in the driver's seat in these scenarios, right? And
Yeah,
it allows you to have that power come back to you versus, we were just talking 6-8 months, a year ago, you couldn't go to an apartment complex and say, give me, I'm not paying this rent. Or let's say you were in a situation where you're renting right now and your apartment complex knocks the rent up on you by $200, right? You can now with confidence say, oh no, I know I can find something way cheaper than this. Either you give it to me either you give it to
yeah,
me at my current rent or I walk. And
right.
you can find something. So using this information to empower yourself, to put yourself in a better situation financially, and so that when you do purchase that home, you're not draining your emergency savings account, you're not draining your accounts, period, on these these rent hikes that these owners are doing.
Yeah, well said, man. Just really well said. And you guys, don't forget to go to his channel, subscribe to his channel, check out some of his content. I could tell you again that the things that Orlando is saying, it's genuine, and he believes in it. He's skilled enough to talk about it. He has the comprehension, he has the background, he has the history. So again, Orlando, and to my viewers, check this man out. He's got really sound advice, and he's got a tremendous amount of skill. So Orlando, from the bottom of my heart, man, I really appreciate you joining us today, my friend. Anything you want to say before I close it out?
No, man. First of all, again, thank you for allowing me on your platform. And once again, I just want to let everybody know, please make sure that you do research of your local area, and don't don't compare your market of Florida to Austin, Austin to Las Vegas, Austin to San Francisco. Please just really focus on your market. Understand what's going on in your market. So when it's time for you to make that purchase, when it's time for you to pull that trigger, you have all the ammo you need.
100%, man. And what better time to do that when you're on the sideline? You know, we don't have
Man,
to stay
you're right.
on the sideline depressed. I'm on the side. Well, other than the renting, I hate that, but I'm on the side like freaking excited. I'm like, yeah, the 10 years up, the rates are up, things are crashing. Like I made the right decision. Let's go. But I'm like
Right.
empowering myself. You know, credit, income, assets. You know, studying my market. But you know, I really appreciate you. Sit tight with me, Orlando. Now, obviously, guys, show him some love. Like the video if I haven't asked you already. And if you're out there investing in real estate, you know I wish you luck and I hope you win.